and welcome to the One Finance Masterclass. My name is Sonam Khatri. I'm an AVP Marketing and Communications at One Finance. This masterclass are designed to see to it that you expert your personal finances. It is designed in such a way that you are empowered to take informed decisions towards your personal finance. Because One Finance focuses only on holistic financial planning, we take you through different parts or aspects of your financial planning through these masterclasses. And today's focus is on tax planning. Yes, tax planning is an extremely important part of your holistic financial plan and may ignore it in multiple ways by taking the final decisions at the end of the year. But through this masterclass, you'll be able to understand a lot of parts of your taxes or your tax planning that you can take much before or get ready for it before you even get those numbers in your hand where you have to pay a hefty amount of tax. Today, again joining us is a qualified financial advisor, Mr. CA Nitesh Buddhdev, who's joining us today. He has around 10 plus years of experience as a tax expert and has been helping multiple clients in taking care of their personal finances. Welcome, Nitesh. Thank you so much again for joining us. You've always been here when we talk about tax planning. We actually don't have anyone to go to when it comes to tax planning because the way Nitesh explains tax planning to us, I don't think we have been able to crack down somebody for the same. So thank you so much, Nitesh, for every time being here for One Finance. Advanced tax is a topic today. We will be decoding advanced tax. This is for salaried and entrepreneurs both. So we need to understand why this is important. But before we get started, let's take a small poll whether you are familiar with the concept of advanced tax. So we come to know how to guide you, how much Nitesh maybe needs to get into the absolute details, because if you're not familiar, maybe he will be able to take you into more details of the same, or maybe share some more case studies to take you through the same. So the poll is online. Let's just check it. Okay, let's just give 2 seconds to y'all and please answer. It's, are you familiar with the concept of advanced tax? The options are yes, no, or somewhat familiar. Okay, let's give one more second. All right, I think we are ready. I think everyone must have taken the poll. All right, yes, they are familiar. 66% of our audience is saying they are familiar with advanced tax. That's great. So this gives a good base that our audience is educated when it comes to advanced tax, and now they just need to understand maybe in detail about this topic. So let's start with the basics once. Why it is important and why we are going through advanced tax right now. Maybe we're sitting in start of December.
True. First of all, thanks. Thanks for having me. It's always a pleasure to come here and talk on any topic. And of course, this is something really interesting what we are discussing at this juncture: advanced tax.
Yes.
And when it comes to tax Sonam, I think everybody listens with
Oh yes.
because
Tax
everybody
बचाने
wants
के लिए
to
कोई
tax
tips
bacha.
बताइए please.
Yes.
I understand that.
Of course, we'll do some tip sharing also at
Sure.
the end.
Perfect.
But yeah, let's get started with the topic. And whenever Sonam comes about the advanced tax, most of the times clients comes to us or during the tax filing season. In the case of July, they said, Nitish, why the TDS has already been deducted, why I need to pay the tax again, and why I'm thinking about this penal interest and all that thing. So normally Sonam kya hota hai, at the end of the financial year, when in July you are there, you are assessing you are just want to file your taxes. Yes. Because all the TDS has been deducted. Absolutely. Now you get a shock.
Yes.
And you ask that instead of getting some refund or at least not paying, why I'm paying this. And that's exactly, we need to know why that advance tax comes, and that also comes with that penal interest. So we'll definitely going to discuss much more about that.
Super. I'll leave the floor for you to explain advanced tax. Do not forget, we are live right now on LinkedIn, Twitter, and the One Finance website. You can watch it on whichever platform you're comfortable with. At the end of the session, we'll give 15 minutes to all the Q&As we have already received on the One Finance website on the masterclass page that is specially made for you all to go through all the masterclasses. And we'll definitely be taking all the questions that come live with us also. So take care and take a lot of insights from Nitesh. Thank you so much, sir.
Thanks, Sonam. Uh, Once again, very good evening, whoever joined live. And as Sonam mentioned, we'll definitely take lots of questions from you live there. And some of your questions might get answered during the session also. So stay tuned. Let's see what all are the things we're going to cover today. So these are the main five topic. We'll see that today. We're going to understand what is the advanced tax. Okay, though some of you and most of you said that you are familiar with the concept, but we'll just touch upon that what is advanced tax and why we are discussing about that. We're also going to see that why you need to pay the advanced tax. Even if your tds has been deducted, still you need to think about the advanced tax and you need to pay the advanced tax. So we will see those aspects. At the same time, what if you miss those deadline or if you don't pay the advanced tax on time? So we'll see the consequences of advanced tax. And uh, that's not it. We also going to cover some of the taxation on the varied investments. Okay, you might be investing in shares, equity, in that case unlisted equities, bonds. You might have some dividend income, interest income. So how those will get taxed and what impact advanced tax has when you are having that kind of income. So that's all we're going to cover today. Let's get started with the our main topic. And the first question here is that what is advanced tax? But whenever it comes to taxation, as Sonam mentioned, what happens normally that we get curious. At the same time, sometimes we think that okay, there are too much of jargon involved, too much of maths, too much of uh, data and sections to remember and all that thing. But trust me guys, I'll make sure that you you learn about this topic in a very comfortable manner, and I'll make sure that with lots of practical case study and examples that you will not get bored with that, and you'll get some insights, and whatever knowledge you have on your advanced text or this concept, it will enhance a bit for sure. So stay tuned and keep your questions flowing. Now, whenever we think about the advanced tax, and let before we get into the advanced tax and the taxation part, let me tell you a story about myself. Okay, I have a 3-year-old daughter. Her name is Ruhi. You must be wondering why I'm sharing this story right now. Okay, uh, get hold of it. Whenever I buy her a chocolate or ice cream, I make sure that I eat a proportion of that, a portion of that. And to be precise, one third of chocolate or ice cream I consume well in advance before she eats her chocolate or ice cream. This has nothing to do with the sugar consumption or just restrict on the junk food. But the intention here is that I'm preparing her that when she'll start earning, one third of the tax she has to forego, one third of the income she has to forego and pay to taxman. This is a good way to of course sharing carrying and whatever you say. But yeah, this is one of the trick I use in case when I want to tell her that this is how the in future income tax going to work for you. So before you get into another aspects, let's get directly started what we are planning here and what we are here for today. Okay, when it comes to advanced tax, you need to remember two concepts. The first is financial year and the one other one is the assessment year. You must have heard assessment year many a times. Okay, what is that? So during the year, right now we are in the 23-24 financial year. 1st April 23 to 31st March 24 is a financial year. So whatever income you earn during this year, that's a financial year. Okay, and you have to, while you are earning also, you have to offer a tax. Now that tax can come in terms of tds. Okay, in certain income the tds will take care of your tax liability. Now if whatever left after tds, but still you might have a more tax liability, and why you will have, we'll discuss that. But if your tax liability after taking into consideration the tds and all is more than 10,000, then you need to think about the advance tax. So that's the advance tax. So whatever tax payment done during the financial year called the advance tax. Now what is assessment year? So normally whatever income you have earned, you have paid taxes. Now all these things you will submit the data in form of income tax return in the month of July in the subsequent year. That subsequent year is assessment year. So if I have to tell you that for which assessment you are paying taxes now or advance tax or whatever your activity you are doing related multiple places. So and that's why we need to know about this now. So if your, I'll just summarize once again, if your tax liability after considering the TDS and all is more than 10,000, then advance tax will kick in. So that's simple as that advance tax is for you. Let's see, can we move to the next slide? But what common question I get, Nitesh, we have a salary income. My employer has already deducted a lots of tax in the form of TDS. Now, why we are talking about the advance tax in that case? Or you might be a freelancer and for some company you are doing some work and you got a professional fees. On that also some TDS has been deducted. Let's say 10% TDS has been deducted, right? And you now might be wondering that why I need to think about any other tax, because my TDS has been taken care by the person who is giving income to me. In case of salaried, it's employer, or in case of freelancer, professional fees, the one you are rendering service to and you are getting payment from. So this is a TDS we all know about. But let's get deep dive into the five heads of income, and it's quite relevant why we are discussing about this five heads, because the first one we all understand is a salary income. You might have a salary income and the TDS is not your headache. What you get in your hand is after deducting the TDS. So that part has been taken care of. But it's very likely that you might have invested in some shares, some mutual fund, you have some bank FD, you are getting some interest, you are getting some dividend. So all those income, either it's a part of a capital gain or a income from other source. So my dear friend, on the screen which you can see that the five heads of income takes care of all or any kind of income you get in your hand. Okay, so the first one, salary, we discussed. The second one is income from house property. So let's say you have a house which you let out to someone and you receive a rent on that, that would be taxed there. Okay, there would be no TDS, so you need to offer tax on that, which will come in form of advance tax. Now whenever you buy some capital asset and when you sell that, based on the period of holding, you would be having a short term or a long term capital gain, right? On that you need to offer a tax. So it's very common that in July, when client comes to us for tax filing, which we were discussing, me and Sonam, what happens in it is, I sold this, says, okay, I got this much profit, and I calculated this much tax I need to pay. But why I'm paying this extra tax? Because you missed out on the deadlines of advance tax. You know that on this capital gain, you might be aware that in this profit, you might need to offer a tax. But how much you need to offer, in which month you need to pay, that's what we are going to discuss. So you might have a capital gain and you might have ignored that aspect and you have not paid or offered a tax on that, and there would be no TDS on that case. Now you might have a bank interest. You will be wondering that in bank interest also, Nitesh, 10% TDS has been deducted. Then what about the advance tax? Yes, because it very much possible that you might be falling in the 20 or 30% tax bracket and you're only 10% TDS, because see, TDS rate is flat rate. Okay, it's designed as per the income or section. It's not individually, it's not like your salary, that your employer aware that what is your salary. In your form 16 everything is mentioned, your deductions and everything, and your employer exactly knows that what kind of tax you need to pay, and accordingly the TDS has been deducted. But that's not the case with the dividend, your capital gain, your interest. So there is a flat rate of taxation in FD. It's, for example, in FD interest it's 10%. So whatever interest you got, bank has deducted 10% of TDS. But what about the other taxes you need to offer, right? Let's say you are in the 30% tax bracket, so you need to offer the other 20% tax from your pocket during the financial year, and that's advance tax for you. So it can be other source, it can be capital gain. So in this manner, whatever five heads of income you have, so it's very likely that you have more than one source of income, and it's very likely that it is charged to some other head apart from salary or business and profession. In business and profession, you know that your freelancing is covered, your any other business is covered, you might be an entrepreneur, you might be dealing in FNO. Okay, yes, FNO is also taxed in a business and profession, your trading and FNO activity. Whatever shares you buy and sell in a long term, that would be investment activity and charged in a capital gain. The tax rate is different in that, and we're going to discuss about that. So if you know this about the fire head, and these are the chances that you miss out on something, and you have to pay penal interest. And how that work, we'll see that. Can you move on to the next slide, please? Okay, you know what is advanced tax and why we are talking about advanced tax today, right? Now, when you know that you have to pay some advanced tax, now what are the due dates of that? Okay, Now you understand, see, government also needs a continuous form of revenue to spend on the various activities, right? So they get in form of GST, which is indirect tax and all that thing. Corporate do pay the advance tax. Your TDS is deducted monthly and paid by your employer. The same way, you need to pay a quarterly payment of your advance tax, and that works like that on every 15th of last month of the quarter. So 15th of June, 15th of September, 15th of December, and 15th of March. In this manner, every quarter on the 15th of last month of that particular quarter in the financial year, you have to make a certain percentage of your total tax liability in this form in terms of advance tax. So the first installment goes on the 15th of June, which is 15% of your total tax liability. Let's say you assess that after TDS and all that, you need to pay 1 lakh rupees of tax. So on the 15th of June, you need to pay 15,000. In the 15th of on the 15th of September, you need to pay 45,000, and out of that, you already paid 15,000. The balance you need to pay the 75% in December, and the last installment on the 15th March. In that way, total you do 100% of your tax liability you pay during the financial year. Now it's very likely you don't know about this, and you have some income, and you missed out any due date, and while filing a return, your CA or you see, if you are filing on your own, you might see that some tax you need to pay. When you see the breakup of that tax also includes the penal interest. We're going to discuss about the penal interest, but before that, let's see this. Can we have next slide? Okay, so according to your knowledge, who should be paying advance tax? Only business owners, self-employed individuals, both A and B, everyone with taxable income. Let's take this poll, guys. I think you all might have the answer by now, but it would be interesting to know that, yes, according to your knowledge, who should be paying advance tax? Only business, self-employed, both A and B, everyone with taxable income. We'll close the poll in next five, one, two, three, 4, and 5. Let's see the result. Both A and B, everyone with taxable income is the thing. You have a taxable income. We have a split across both A and B, and everyone with taxable income, 66% for everyone. So yes, everyone who are having a taxable income needs to pay. But still, let's see in detail who don't need to pay. There is some twist. Okay, now, if your tax liability after all the TDS has been deducted from you is more than 10,000, okay? I'll repeat that. Your tax liability after TD has been taken care of, your it can be from your salary, or it can be, let's assume that you are in the 10% bracket, okay, and your TDS from FD is also taken care of, then there is no liability of advance tax, because after considering all the TDS, the total tax you need to pay is not more than 10,000. Then there is no liability for you to consider about the advance tax. So yeah, if your liability is more than 10,000 during the financial year, you need to pay the tax. But if you are a senior citizen, but a resident senior citizen, and you don't have any income from business and profession, this sections is not applicable for you, so you don't need to pay advance tax. Again, repeat that. If you are a senior citizen but a resident senior citizen, and you don't have any income from business and profession, you are only salaried, or you might be just getting pension, and you have some capital gain and other source, in that case, your tax payable can be 50,000, lakh, 2 lakh also. You don't need to worry about the advance tax. That is not applicable for you. That doesn't mean that the tax is not applicable for you. It's always recommended that you pay tax in some chunks instead of paying all together while filing your return. So that's the case. And of course, the last one is that you might be any assesses, but if your TDS covers the total tax liability, as we discussed, right, then you don't need to pay the advance tax. So this is one of the things which we should be aware about, that the resident senior citizen is not liable to pay the advance tax if they don't have business and professional income. Let's see the next slide. Okay, that's quite interesting poll. Have you ever faced penalties for late advance tax payment? Yes and no. Because at least we came to know that many of you are aware about the advance tax. So I think this is less likely, but let's see that. Have you ever faced penalties for late advance tax payments? Yes, no. We have someone in the room who has paid the penalties. Please participate, guys. I'll get some insight on that and I can take it forward accordingly. Let's close the poll. Let's see the result. 25% yes, 75% no. I'm so glad. Very few people have paid the penalty, but of course, now you will never be paying thanks to One Finance and this masterclass, and thanks you are attending this. So let's move forward. What and who all has paid the penalty? Why they paid the penalty or penal interest? And some of you have not paid. You got either got lucky or you might be aware about this. Let's see how we need to see. Okay, understanding late payment interest on advance tax, consequences of not paying advance tax. Let me tell you ABC of that. Oh, when I say ABC, I'm literally meaning that income tax section 234 ABC deals with the advance tax and the late filing of return. 234A is not mentioned, but I'll just touch upon that. 234A section says that if you are filing return late than the due date, let's say you are individual, your tax filing due date is 31st July of that respective year. So for example, for this year, 31st July 24 is the due date. Okay, now due to some reason you are not filing taxes, your return on time, and you are live, you have some 50,000 or 1 lakh rupees of income tax outstanding to pay or advance tax in that case. So what will happen? Let's hypothetically assume that instead of filing in July, which you should be filing before July, the 31st of July, you are filing in October. So August, September, October, August, September, October, 3 months interest, penal interest will be applicable on that tax outstanding. Let's say 1 lakh is the tax outstanding. If you are filing return late, of course there are other penalty of in different section, but this is the penal interest of 1% you need to pay because you are filing your taxes late. In this case, in this example is, let's say, October. Okay, so August, September, October, 3 months into 1 percentage into, let's say, your tax outstanding is 1 lakh. So 1 lakh plus 3,000 rupees would be payable while you are filing your return in October. Now, let's talk about the 234B and 234C. So 234B deals with default in payment of advance tax or non-payment or short payment of advance tax. And 234C deals with default or short payment in terms of individual installment of a advance tax. Let's deep dive a bit into each of these sections. A, we already discussed. Let's see that what 234B stands for and what are the provisions in that case. So the first condition, if in 234B we are discussing, the first condition is that your income tax liability is more than 10,000, your advance tax liability is more than 10,000. We all now by aware that if it's more than 10,000, advance tax is payable. So that's the first condition. If it's satisfied, now check the second condition. Advance tax paid is less than 90% of the due amount during financial year. As we know now, you need to pay the advance tax. Let's assume that you need to pay 1 lakh rupees of advance tax. Okay, it's more than 10,000. That is ticked. Now the second thing is that you should ideally be paying before 15th of March during the financial year that full 1 lakh rupees in 15, 45, 75, 100 in that installment, in that manner as we have discussed. But you don't know about this provision and you forgot. And while filing the July, like this is the classic case we have seen in case of our client or any prospect or any people we normally interact to. Let's say you're filing your return in July, by 15th or 20th of July, when you are filing your return, you have outstanding 1 lakh rupees tax liability which you were not aware. You have booked some capital gain or you have some interest income, and on that you need to pay that 1 lakh rupees of tax. Now what this section says, you would have paid this 1 lakh during the financial year, but you have not paid. So April, May, and June and July, this 4 months is delayed. April, May, June, July, April, May, June, July of 24. Okay, after the financial year. So 4 months into 1% into the original tax liability, which is 1 lakh, into 4 months into 1%. So you would be paying 1 lakh 4,000 while filing your return. Yes. So if you file your taxes without paying this taxes, you would have a demand. Or if you want to file a proper return, you need to pay 1 lakh 4,000 instead of 1 lakh. So that's 4,000 is your loss if you are not aware about this provisions of advance tax. Second scenario can be you have a 1 lakh rupees of liability, and somehow you just estimated wrongly or you just paid 50,000 rupees. Now, a balance 50,000 you are paying while filing a return. So you will pay interest on that 50,000 because you have paid 50,000, and which is less than 90% of total tax liability. 1 lakh is the tax liability, you just paid 50,000, and the balance 50,000 you are paying along with filing taxes, so you need to pay penal interest on that another 50,000. Now the third case, let's assume that you have estimated liability around 92,000 and your actual liability comes out to 1 lakh. Because 92,000 is more than 90%, this section is not applicable for you and there would be no penal interest. So this is how the leeway is given when it comes to 234B. Let's see in detail 234C also. Pay 1 lakh rupees of advance tax. Okay. Now you understand that 15th June you need to pay the 15,000 rupees of taxes. Why? Because 15% by the 15th June. Okay. And instead of paying 15,000, you miscalculated, you and just paid 5,000 rupees. Okay. Now, on the 10,000 rupees, you have to pay interest for 3 months. And again, the interest rate here is 1% simple interest. So you would be paying on 10,000 3%. So that's how you need to calculate when it comes to 234C. So that's ABC of advance tax and late filing for you. And these are the consequences. So who all are have paid the, in our poll, what we have seen that if you have paid the penalty, this is how you can save yourself from paying it, saving it from this. Okay. Can you move to next slide? Okay. I believe you must be a bit clear and completely clear with the advanced text. But let's still, as I promised in the beginning, I'll not use so much of jargon and I'll try to simplify for you and I'll not make your life more miserable with the taxes. So let's see a practical case study. Let's say Mr. X having a net annual salary income of 25 lakh, additional interest income of 5 lakhs. So that interest income would be taxed in income from other source. Salary, as you are aware, 25 lakh rupees would be taken care by the TDS part would be taken care by the employer. He is having investments during the financial year 50,000 each in PPF, ELSS, and tax saving FDs, and he has also bought medical insurance for his family, which is 25,000 rupees, and for his senior citizen parent, which is 40,000 rupees. And he and the additional information is given is that 10% TDS on 5 lakh is deducted by the bank. Okay. Now let's see how actually we'll come to know about what are our tax liability and how we will be offering the advance tax. Okay. Let's see the solution. Okay. So 25 lakh is the income from salary. Income from other source, which is bank interest, 5 lakh rupees. Gross total income is 30 lakh. We all are aware that we'll get a standard deduction of 50,000 from the salary. ATC, your tax saving FD, your ELSS mutual fund, and the PPF is eligible for 1.5 lakh rupees of ATC deductions. Okay. So that's 1 lakh 50,000. And in ATD, you can claim your health insurance and your senior citizen parents health insurance up to 50,000 rupees if they are senior citizen. So that 40,000 plus your 25 is 65,000. So all this would be deductible from your income. So 30 lakh minus 2 lakh 65,000 rupees. Your taxable income now would be 27 lakh 35,000 rupees. Now, how to calculate tax on this? One other mistake what I have observed that people do mistakes here, because it's 27 lakh 35,000 rupees. Somebody will say, Nitesh, okay, I'm in the 30% bracket. 27 lakh 35,000 into 30%. Simple. No, you have to calculate in a slab manner. And how that slab works. Okay, up to first 2.5 lakh rupees, no tax. 2.5 to 5 lakh rupees, 5% tax, which is 12,500. 5 lakh to 10 lakh is 20% tax, so which is 1 lakh rupees. So in first 10 lakh rupees, everyone would be paying only 1 lakh 12,500 and not directly 30% of this. You have to calculate the taxes in a slab manner. Okay. And now 27 lakh 35,000, and we already calculated tax up till 10 lakh rupees. So whatever balance left, 17 lakh 35,000, on that only 30% tax would be applicable. And now if you do this math, you can check, you can cross check, you will come with total tax of 6 lakh 33,000. On this, you have to offer 4% cess, which is 25,320. And now your total tax liability is 6 lakh 58,320 rupees. This is the total tax payable. I'll just repeat in case you have missed some of this part. We have first saw that what are our incomes, that includes salary, other source. In the case study we are discussing, it's given there. Now we have deducted all the deductions which is applicable, ATC, ATD and standard deduction. After that we came with the net taxable income. और taxable income जो हमने calculate किया उसके ऊपर slab rate के हिसाब से we have calculated the taxes. Okay, and then we came with the tax, and the 4% says that which is total is 6,58,320. But is this we directly offer as advance tax? No. Being salaried, or in this case Mr. X is a salaried, for like 920, which is calculated by the employer on the salary and whatever deduction you have submitted in the office. Let's say ATC, ATD you have submitted, the 50,000 deduction he has taken care of, the standard deduction. After that, whatever income is chargeable to tax, he will calculate the TDS and he'll deduct. It's his headache. So forget about that part, which is for like 920. And you also have the information on the 5 lakh interest which you have received. Your employer is not aware. Okay, or let me just highlight one more part here. Even if you have not received the interest, but your FD is a cumulative FD and interest has accrued. When I say accrued, is added to your FD. Okay, there are two types of FD. One is you get the interest upfront every year or every quarter or something, or just it gets accumulated. So even if it's getting accumulated, and where the problem happens that people are not receiving any income and they will think that I'm not liable to pay any tax on this. So remember that aspect as well. On this also tax is applicable. Now bank will do their part, they will deduct 10% of the TDS. So that's the 50,000. Now 6 lakh 58 320 minus 4 lakh 920 and 50,000, that has been taken care by either salary, in case of salary by employer, and bank the 50,000. Now whatever is left after that, that's your liability, you have to offer. And now if you don't know about this provision, you might not offer, you will come to know only this while you're filing return in June or July, right? Now how to take care of that? 2,07,400. Let's go to next slide. Okay, now we know this provision, how we need to pay the tax. So on 15th of June, 2,07,400 into 15%. So you'll offer 31,110 on the 15th of June. Then in the September, you need to pay total 45% of total liability of your advance tax. So 45% of 2,07,400. But of course, you already paid 31,110. So you will pay 62,220 and so forth, like 75% and 100%. If you do the total of this, that's total you need to pay is 2,07,400 for you. So this is how you calculate your tax liability. Even though your employer has taken care of, your bank has taken care of, there would be some element if you are in the 20 or 30% tax bracket. Let's see the next topic. Okay, capital gain. Why we are jumping from advanced tax to capital gain? Any idea? You want to hit the chat box? You want to say that why we are discussing about the capital gain? Because very likely you would have some income from capital gain. You would be putting your savings to some passive income or investments. You might be having some trading income or investments from equity shares or mutual fund, or you might have the other source also, but other source is pretty clear that you need to pay as per slab. So capital gain has a different sections and a different things to consider, and that's why we are touching upon the capital gain also. Because first of all, what is capital gain? Though even if you are aware, let me just touch upon this. If you are selling any capital asset, whatever profit you make on that, you have to pay tax on that. That tax would depend upon that how many months you are holding those asset. So for example, that asset can be gold, it can be equity shares, it can be unlisted equity shares, it can be bond, it can be debenture, it can be mutual fund. So all these are considered capital assets. So if you are redeeming this asset, you need to pay tax on that. Now as I mentioned, it can be a short term capital gain or a long term capital gain. Now short term, again there are many definitions for short term when it comes to capital gain, and that's why we are deep diving into capital gain a bit. Let's see the next slide. Before that, are you aware of how capital gain impact your advanced tax liability? And of course, why we are discussing capital gain, I already told you. But are you aware of how capital gains impact your advanced tax liability? We have a poll launched. Please participate. Please do vote and stay tuned. We have another case study coming, and you would find it insightful, I believe. And of course, we'll be taking question and answer your questions, and I'll be answering that after this session. Can we have the poll live? Okay. Are you aware of how capital gains impact your advanced tax liability? It's not visible. It's done. Okay. So, okay. Thanks for voting. 66% says no. So this is going to be interesting, Sonam. Okay. Then let's see a bit about the capital gain first. As we are aware and as we discuss, if you are redeeming any capital asset, there will be some gain or loss. Okay, that would be called capital gain or capital loss. Okay, now it's a short term or long term that decides based on what kind of assets you are redeeming. So if it's a equity shares or equity oriented mutual fund, if you are holding those mutual fund or shares for 12 months or more than 12 months, okay, that would be termed as a long term capital gain, and on that you would pay 10% tax if your gain is more than 1 lakh during that year. Okay, so I'll repeat, if it's a equity shares or equity mutual fund, and if you're holding that, okay, before selling you buy it, let's say in X month, and you are selling after a period of 12 months, that termed as a long term because it's more than 12 months old investments. And now on that, let's say you are making a gain of 1,50,000 rupees. Okay, and on that you will only pay tax on the 50,000 because the first 1 lakh is exempt. So that's long term capital gain equity for you. If you are selling, of course, within 12 months, okay, so that would be a short term capital gain, and that would be charged at 15%. Now, the next is property or unlisted shares. If you are holding this for more than 24 months and then selling, that would be termed as a long term. I know that the 12 month, 24 months, yeah, there are few sections here which has a different holding period for short term and long term, and that's why we are discussing this. So if it's a 24 months, 20% after the indexation, okay, you will get the benefit of indexation. That simply put, it's the benefit of inflation has been passed on to you by the government, and that's the indexation. So that's the another benefit. So 20% long term capital gain on property and unlisted shares if you are holding for more than 24 months. So that's 24%. At 24 months and more, that's 20% with indexation. If you're selling before 24 months, that's short term capital gain, and that would be charged as per your slab. That can be, you can be the 5, 20, or 30% slab rate. Okay, now debt mutual fund, that has recently changed during this financial year from April 23. Earlier there were debt mutual fund taxation differently. We'll discuss more about that, but right now, if it's a debt mutual fund, it will always be considered as a short term, and it would be charged as per the slab rate. Now let's talk about the fixed deposit. As you are aware, this is as per slab. Post office deposit as per the slab. You might be having a business consulting income. Of course, it is a business, and that will be charged as per your slab rate. Okay. Only capital gain, when it comes to capital gain, there has some different provisions, and that's why we are touching upon the capital gain, and it would be quite relevant for all of us, and that's why we are discussing this. Let's see the next slide. We are discussing a bit more about the mutual fund here. Why? Because as I told you, this is the recent change during this financial year when it comes to a mutual fund taxation. Okay, now whatever mutual fund you are holding, there are now three different I would say three different rules to tax those mutual fund when you come out of that. Okay, you have to decide, or you should be aware about that, your mutual fund fall into which category, and how you we going to distinguish between them. If the mutual fund you are holding is equity oriented mutual fund, which means if your mutual fund holds more than 65% of equity and equity related instrument in the mutual fund, that's long term. And we have seen the long term capital gain more than 12 months 10%, and less than 12 months 15%. Okay, and more than, of course, 1 lakh, you pay 10% tax. So that's pretty much simple, and that has not changed at all. Change come here. Now there is one more category, which is if your equity if your mutual fund is holding equity between 35 to 65%, between 35 to 65%. If it's more than 35 but less than 65%, you need to remember one more long term and short term. If it's more than 36 months you are holding those kind of a mutual fund for more than 36 months, it would be taxed as a long term capital gain, and on that you will pay 20% with indexation. But if you are selling within 36 months, it would be short term capital gain, and it would be applicable. The tax rate applicable would be as per your slab. And now all other, which means if your mutual fund is holding less than 35% of equity, Indian equity. When I say equity, it's Indian equity. That would be always termed as a short-term capital gain, and the tax rate on that would be as per your slab. Now, when I say a debt-oriented, I mean that less than 35%, it's your gold mutual fund, it's your foreign equity fund of fund, your typical debt mutual fund, silver FOF, whatever you term this in this, which is not part of equity oriented, or when I say non-equity oriented, is a typically a balanced fund which holds more than 35% of equity but less than 65% of equity. So these are the three distinguished things you need to remember when you are dealing into the mutual fund. Let's go to next slide. Okay, as I promised, that's the last case study which we would be discussing, and how the capital gain would impact your advance tax liability. Miss Kavita has a salary income of 8 lakh rupees. Okay, see, sells the shares 5 lakh, worth 5 lakh on 30th June 2020, earns short term capital gain of 2.5 lakh. I think Sonam C must be the one who had got a good IPO allotment in this season of IPO. She must have earned a good short term profit. So she's selling it out within 12 months. If you sell within 12 months, whatever mutual fund or shares you have bought, you have to pay 15% tax. We all are aware about that right now. So on the 8 lakh, the tax liability would be taken care by the employer. That's not our headache. That's done. Now let's talk about this 2.5 lakh rupees. As we just saw that on 2.5 lakh rupees, you have to pay 15% tax because it's a short-term capital gain and this is equity. STT paid equity. Okay. So on that 2.5 lakh, you would be paying 39,000 rupees tax. That's 15.6%. 15% plus 4% cess on that. So 15.6% is the 39,000 rupees. But now, as you can see the date, and that has a purpose, you would be saying that Nitesh, on 15th of June, I'm not aware I'm going to do something on the 20th June, right? Yeah, of course. We are not an astrologer, or we don't know that what we're going to do after 5 years, or what is going to happen, how the market is going to react, and what you action you're going to take. So what capital gain and how the advance tax works in that, whenever you take any action like booking a capital gain, you pay the tax liability in the subsequent installment. So the June has passed, the next installment will come in September. So you can see that on the 15th June, 15% liability would not be paying because you don't have any liability, so not applicable. In the September, you will pay 45% of 39,000. So that's 17,550, 75% and 100%, so and so forth. Now you know the structure. So it might be possible, we are doing masterclass now. You might not be aware about this section, but you have booked some capital gain in the month of July, August, right? Very much possible. You have to pay that on the 15th December. In next few days, you have to pay up to 75%, because by the 15th December, you would pay 75% of your tax liability. So this session we are doing is quite relevant who are not aware about the advance tax and the penal provisions, so you can save your hard-earned money on the this penal interest. So that's how the section 234 ABC works, and that's how your capital gain, in case of capital gain, how the advance tax works. So that's what I wanted to highlight. Can we move on to next slide? To this income tax website, go to e-pay tax. It quite self-explanatory. You put your PAN number, you select the assessment year, and you will say what kind of payment you are making. Okay, so in that you can select the advance tax. Okay, 100 number is mentioned, that's the section mentioned there. So under that you can offer that tax liability, and of course don't shy away from taking the help of professional if you think that you need help of professional to calculate the tax liability and to make the payment of the same. But yeah, you should be aware about the taxes, you should be aware about the personal finance, you should be aware about that how the taxes affect your personal finance, because that's quite essential, I think, in nowadays. Thank you so much.
I learned a lot of things today. And there are a lot of questions we have already received on
Great.
all the three platforms that we are live on. So let's start with.
I'll try and do the justice.
Please,
I'll try.
please do. I'm sure you will. All right. So first, let's take the questions that have come on our website. Okay. First of all, Mr. Okay, Sagnik is saying looking forward to an amazing masterclass session. Hope this was insightful for you, Sagnik, and you can always go to the One Finance website and see other masterclasses also that are interesting for you or connects to you better. All right, I have a question from Mr. Rahul. He's saying, can you help understanding advanced tax on rent? He has put a bracket of 50K. Maybe he's paying a rent of 50K. So he wants to understand the advanced tax on rent.
He might be receiving the 50K of rent. He's not
Okay.
paying that, right?
Okay.
Yeah. So if you are receiving 6 lakh rupees per annum, what we got from your question, so on that 6 lakh rupees, you need to calculate what's your income from house property. And there is altogether a different law applicable when it comes to when we calculate like differently for the capital gain. The same way, when you have an income from house property, you get a certain deduction. Like in salary you get a 50,000 standard deduction, the same way you get a 30% standard deduction in case of rent received. So see, he has to calculate what would be the income from house property, and then he needs to club along with the all income he's getting, and then he accordingly needs to calculate the tax liability what he's getting on the income from house property. Absolutely. Hope this solves your question. And if not, definitely Nitesh will. You can always message back Nitesh. He can always reply to you. But always do not forget to go to a qualified financial advisor whenever you're taking so many calls over there. All right. The next question is from Mr. JM. Okay, I don't have the full name, but can you help on advanced tax on gift? Okay, so see, whenever you are receiving any gift, there are possibilities that Sonam, either you are receiving gift from the relative, and this is not relative which we normally talks in India because every other person is relative in that case. But the income tax has a specified definition of relative. Okay, so you need to check out that definition. If that gift is received from that relative definition, it will not be chargeable to tax, so you don't need to pay any tax on that. But yeah, if you are receiving gift from friend or someone and it is more than 50,000 rupees, that would be taxed in income from other source. And like we discussed about the interest and all that thing on that gift, of course any tax is not deducted. So whatever is charged to your tax, you have to calculate the tax liability like we did as per the slab, because it's income from other source if it's received from non-relative. Sure. And you have to offer tax accordingly. Okay. Savnik is asking, can I claim interest on advanced tax payments? This is interesting. No. Because it's already a penalty, as you can understand, right? So you will not going to get any benefit of you are paying that. That's the penalty because you are not aware about the section or you are paying it late in that term. So there would be no benefit of paying penal tax. Okay. Okay. So Rahul, whom we answered, I'm paying more than 50K rent to the landlord. Mhm. He's paying the rent. Okay. He's not receiving the rent. So is there any advance tax on the rent he's paying? No, so see, it's your expense, right? So there is no question of taxation on that. So if you're asking that you get any benefit of paying rent, so if you are a salaried employee, Sonam, so in that case, there is a provision of HRA, house rent allowance. Yes. So there is a step to calculate what would be your benefit. So if there is a HRA available in your salary, then you would be able to take benefit of what rent you are paying in the manner it's given in the income tax, how to calculate the benefit of HR, and that your employer would help you what you can once you submit that rent receipt and all that thing, they will consider the benefit available to him, and they will accordingly deduct the less TDS. Okay, just to get you started on your HR exemption, we have a calculator on the One Finance website. You can always get started there, but do not forget, qualified financial advisor is the place you have to go. All right, another question is, for the first installment, do I pay 15% on actual income only up to June, or do we assume full year income and they then pay 15% tax on assumed full year income? Similarly, for the second, third, and the final installment, assumed for final income for the year is 25 lakhs for this person. I got the question, and thanks for asking this. It's quite interesting. That's the difficult part of the advanced tax. You have to assume the income for the full year. Okay, so let's say you are expecting that your income is 25 lakh rupees, and if you are entrepreneur or freelancer, you would have some expenses also. So let's hypothetically assume that 12.5 lakh rupees is the expense. So you are paying tax on 12.5 lakh rupees, because out of 25 lakh, 12 lakh 50,000 is the expense. So now you need to pay 12.5 lakh के ऊपर ही जो tax offer करना है वो करना है. Now you have to estimate the income also, what you're going to get in the full year, also the expense. I know it's a difficult part, but that's how the income tax provision works. And that's why if you see that there is some leeway given, that you pay 15%, 45%, 75%. So during the first quarter, you have to estimate that what would be the income during the year and what would be the expense, and accordingly do the same exercise which we were doing. This your expected income, expected expenses, expected deduction also, that you might invest in the ELSS mutual fund, let's say in the January, but you know that you're going to do that, so you also account that right now when you are calculating in, let's say, starting of the year April. So accordingly, he has to consider the full year's income. I know it's difficult part,
Yes.
but that's how we need to do, and that's how advanced tax work.
Next question actually connects to that. How a freelancer estimates the tax liability, especially for advanced tax. Freelancer, he doesn't know how much he's going to get
Yeah,
income for the year.
again, so same answer applies to you also. You have to see that what kind of approx income you're going to get, okay, and you expect that, okay, I am going to have so and so income during the year, and also estimate the expense, and accordingly you have to offer the advance tax. And that's why in four installment where we are making, let's say you are not very much sure in June, you might have miscalculated, okay, and somewhere in the month of August, September, you got a more income.
Sure.
Okay, so that's why when you are paying that 45% of total tax liability, you already paid the 15%. In the next installment, make a higher payment accordingly, and accordingly adjust that. So there would be, even if there is a penal interest, it would be very less.
Sure. Okay. We have a question from Deepak. He says, "Can I make payment in one go for the advance tax?" Yes. So we have divided into 15, 45, 75. Can we do it in
So
one
when I
go?
saying advance tax को और advance कर सकते हैं.
Exactly.
Government would be more than happy, and it's honestly it's a practical scenario also. Many of our clients, let's say, just need to pay, let's say, 20, 25,000, or let's say it's not material amount. Okay, so material depends upon what kind of income and taxes they are paying. So if it's not a material amount, and you said, because I don't want to get into 4 quarters, 15%, 45, and all that thing. I know I need to pay around, let's say, 25,000, 30,000, or 40,000 tax, and I just want to pay all together. You can always do that, but in advance. When I say in advance, so you know that you want to pay full 25,000. Don't wait till December or March, because otherwise you have to pay 2 or 3 quarters penal interest. So yeah, you can pay all together, but always pay well on time.
All right. Okay. Ms. Nisha ji is asking, is there any ready-made calculator available to calculate my advance tax? So,
Yeah, so
yes.
Sonam, on the income tax website only,
Sure.
there are many calculators available, and that's the best way you can, and that's the legit, and that's the proper, without any error. You can see that what kind of income you have, what kind of expenses you have, or what kind of deduction you have. You can put all that. There are various calculator available that will throw you a figure that what would be your tax liability, and also give you and what installment you need to pay. So you can check out the income tax website. They have a very detailed calculator for many of these things.
Perfect. Okay. Given the brackets of tax emotions, how should one plan on taking maximum benefits on it? So I think he meant all the options that are available for tax in the all the brackets that are available. How one should plan the tax on maximum benefits. Tips DJs. That's what he's asking.
Thanks, Bachana.
Thanks, Bachana.
So I think that we can have the next masterclass on that topic, how to save maximum tax. So that's quite a personalized thing, because honestly speaking, we can talk about few deductions, we can talk about few exemptions, and how to plan your taxes better. Okay, but again, we need to consider so many aspects, like Sonam mentioned, that you need to know your what's your income, what's your expense, what deduction you as an individual can claim or take, and how we can do few planning through your family members also. That also we need to take care of. So of course we can talk about the general deduction and exemption in some of the masterclass.
Sure.
But I think one should follow the personalized approach, and that would be
Absolutely.
more helpful and more useful, and that's what I feel.
Absolutely. Okay. Manjuji is asking, a person doesn't have any source of income, doesn't file income tax. However, he earns rupees 4,500 from IPO trading. Does he has to pay any tax and file returns?
No, if your income is not chargeable to tax, okay, then there would be no tax liability. Okay, now, but it's interesting, Sonam. But let's say even if you don't have an income,
Yes.
there are some provisions in the income tax. So, for example, one of that I can recollect and I can share that if you are paying your let's say you are spending some amount on your foreign travel.
Sure.
Still, there is nothing, no relation to your income. If you are spending some amount on some part, let's say foreign travel, and you are taking so much, so much and so much of foreign currency or foreign exchange, you need to file a return. If you are paying a light bill of X amount, okay, that is mentioned in the income tax, so you need to file a return. So income tax is trying to do the return compliance from the expense part also. So if you fall into that particular things, then you might need to file the income. But whatever I got from your question, if those expense you are not incurring, like I mentioned about the light bill, the heavy light bill or the energy bill you are paying during the financial year, or you do not have a foreign exchange of up to a certain limit, you are not liable to pay tax or file return. But it's always recommended to file return. You might need for in future for visa or taking a loan, or just to build your overall trail of income, you should be filing a return if possible.
Sure. All right. Mr. Ashish is asking advance tax for fixed deposit interest. So,
Like we
discussed
we
it.
discussed in the example, the TDS deducted on the fixed deposit interest by bank is 10%. Okay, and let's hypothetically assume that you fall in the 30% tax bracket. So the gap of 20% you have to offer from your pocket, because it's anyway income from other source which is chargeable to tax as per your slab. And when I say as per your slab, Sonam's slab of income can be different, my can be different, but bank is going to deduct from both only 10%. So if C fall in 30%, C needs to offer that 20%, because 10% is taken care. And let's say if I'm falling in 20%, I need to pay 10% on that interest, because 10% is taken care of. Hope that clears your
Clears the question. All right. Just let's take one last question. How do I calculate the advance tax for the income from F&O trading?
Okay. As we were discussing, you can't estimate capital gain or FNO trading for that matter. Whenever you have those income, you pay taxes in the subsequent due date. That's the best way possible. Because in case of business, Sonam, we might have some idea, because I have some client, I'm charging X amount, I might have XYZ client, but FNO you don't know. Of course, if you know from the past year that this is likely to be my income during the year, you take that base. That's the one option. And if you don't know, the best possible way is that whenever you do have the income, or whenever you're booking some profit, at that time certain the liability of taxes, and you pay that.
Absolutely. Okay, let's take this last question. This is interesting. ESOP taxation, how should be taken care of? That's the only question we have. ESOPs, the person who may have ESOPs, how will that person have to
So a
put in
bit
taxation?
detailed answer, not relevant to our session, but I'll of
Yes.
course I'll help you with that in short. That whenever you are allotted the ESOP, okay, there are two way it will get taxed. When you get the ESOP, okay, that would be termed as a perquisites. Okay, so let's say market value option, it's a bit detailed, but I'll just try to answer that. Let's say if market value is 100 rupees and you are getting ESOP for 10 rupees because you are an employee, okay, then on 90 rupees, because the market value is 100 and you are getting for 10 rupees, the 90 rupees would be clubbed in your income as a perquisite. So he has to pay tax as per slab on that 90 rupees. Now let's assume that that 100 rupees, the ESOP you got, you are selling after a few years for 200 rupees. Now you have to pay tax not on 190, only on 100, because on the first 90 the tax has been already paid in terms of slab. So when you sell it for 200 rupees, the other incidence of tax will come under the capital gain, 200 minus 100, and not minus 10. So that's how it works. But yeah, it's interesting. We can do some thread or something on
Absolutely.
this.
Now I'm finding it interesting. Definitely hope this whole session was insightful. There were a lot of questions we received. Thank you so much for engaging with the One Finance team. All the masterclasses are available on the One Finance website. You can always go and check out again. If you have missed any part of today's session, also, you can always go back and listen to the complete conversation or complete session over there. You can always send us back questions. I hope Nitesh sir will be comfortable in answering any of them that keeps coming. We'll be definitely connecting with our tax experts at the One Finance team also if you need any help with qualified financial advisory. Thank you so much, everyone, for joining. Thank you, Nitesh, for this session.
Thank you so much, Sonam, for
Hopefully,
having me.
we'll see you again in December with next masterclass. We'll definitely update you about it. Thank you so much.
Thank you.